Let's switch gears briefly and talk about the brand of the green siren. Starbucks is out with its first quarter earnings. Our own Brian Sozzi, he's sipping on coffee 24/7. He's got the numbers for us. Brian.
Hey, Brad, so nice to see you in the afternoon. Always a pleasure being on with you. I'm going to write this headline very simple for all you SEO friendly people out there from left to right. Starbucks stock, price for perfection, dash, dash, dash. Here's why they need to deliver. A couple red flags in this quarter. First up, global same-store sales up 5% year over year. The estimates were for an increase about 6.8%. Oh, yeah, they also missed on earnings by 2 cents. The problem here, I think, and this is why the stock is selling off initially after hours and why the current quarter missed, it was China. Same-store sales, I'll just say it, guys, they just crashed, down 29% year over year versus estimates for a decline of 13.3%, in large part because of the just the chaotic reopening of the Chinese economy, of course, impacting China. Also, another disappointing area for this quarter, operating margins 14.5% non-GAAP basis, 14.7% estimate. So lots of disappointments in this quarter. I think the street is playing off of those disappointments instead of what Starbucks said. They are reiterating their guidance here, guys. And I think that guidance really reflects their hope and belief on two things. First up, that the Chinese economy rebounds later this year and same-store sales ultimately increase off of easy year-over-year comparisons. And number two, there is no U.S. recession in the U.S. and consumers continue to pay higher prices for their various cups of coffee. But to that point, I will note, within that global same-store sales estimate, transactions were down 2%. Transactions down 2%, telling you there are some consumers out there balking at these higher-priced coffees Starbucks starting to shove down your throat.
I know you like the Trenta, right? That giant jug of coffee. The expectation was...
I'm a buyer.
The expectation was better numbers
I don't care.
in China and a bit of a pullback here in the United States. That's what analysts were expecting. Was the bigger disappointment here or China?
China by far, Dave. Sure, the market understood that Starbucks and a lot of brands like it, like a Yum Brands, all these companies with outsized exposure to China, thousands of stores in this country, are going to see same-store sales declines. But still, in that initial couple minutes after an earnings report, to see a mighty Starbucks, which has relied on China for years to help propel its growth, to see same-store sales just flat out crash 29%. I mean, that's a lot for, I would argue, an already nervous market to take. Now, of course, there'll be more updates on this Starbucks earnings call very shortly. They will go into greater detail in that outlook that they reaffirmed. I am not a fan of a company not putting their full outlook on their earnings press release. The Starbucks is doing this yet again. They make it into the earnings call. I wish they would just give me the numbers on the earnings press release. Nonetheless, we'll be on that call.
All right, get another coffee, brother. You a cold brew guy?
I am a cold brew, and I was hoping to actually come on, Dave, and see you with no shirt again. But you know what? We all have wishes. We all have wishes. Really like that segment.
Sorry to disappoint, my friend. Good to see you, Brian Sozzi. Thank you so much.